Good day, viewers. You are welcome to Financial Account class of Abeokuta Grammar School online teaching. I still remain myself Ogunyonwo Ifetayo. Today's topic is on bank reconciliation. And at the end of the class, we first of all have to look at the objective that we are to achieve at the end of the class. The first one is that the student must be able to define the bank statement. 2, the student must be able to explain what is a bank reconciliation statement. And 3, they should be able to state and explain the reasons for the difference between the cash book, that is the bank column, and the bank statement. And 4, you should be able to prepare the bank reconciliation statement using the tools perspective. Now, on the tools perspective, we have one, which is the bank reconciliation statement on its own. And the second one, we have the bank reconciliation statement using the balance of the adjusted cash book. In the course of the lesson, we will see discuss the adjusted cash book and how we are to prepare the adjusted cash book. Now, going by it, we have to look at the definition of bank statement. The bank statement is a statement sent by the bank to their customer periodically, stating the details, transactions of their customer with them. And number 2, let us look at the definition of bank reconciliation statement. Now, the bank reconciliation statement is one prepared to reconcile the disagreement or the differences that occurs between the cash book and the bank statement, showing entries causing the differences between the two balances, that is, between the balances of the cash book and the balance of the bank statement. Now, let us look at the reasons. The reasons for disagreement between the cash book and the bank statement. We have numerous reasons. Number 1, we have the unpresented check. Now, talking about the unpresented check, these are checks issued but have not been drawn from the bank. These are checks issued by the bank customer but have not been drawn from the bank as at the time of the preparation of the bank reconciliation statement. The second one is the uncredited check. Uncredited check are checks received and entered on the debit side of the cash book but have not been entered in the bank statement due to lateness, or the bank statement have been prepared before the check was paid in. That is, the check have not been credited in the bank account. That is why they call it uncredited check. Now, number 3, we have dividend. Now, the dividend is part of the profit distributed by the shareholding company, paid in directly into the bank account without the knowledge of the customer. It is paid into the bank account without the knowledge of the customer. Number 4, we have standing order. Standing order. This is an express order given by the customer to the bank to make regular payment on his behalf to someone either weekly, quarterly, or yearly. Either weekly, quarterly, or yearly. And number 5, we have this honored check. Now, a dishonored check is one in which have been rejected by the bank, due to certain discrepancies, either a wrong signature or incorrect amount or mutilation of the check and other reasons. So the bank, due to all these reasons, the bank will reject payment or honoring the payment of the check. And number 6, we have credit transfer. Now, credit transfer is one that which payments are made directly into the bank account of the bank and of the customer of the bank without the customer's knowledge. Without the customer's knowledge. And number 7, bank charges. We have bank charges. The bank charges are amount deducted by the bank for services rendered. And when the bank are charging this amount, the customer of the bank are not aware that the bank are deducting all these charges. Errors. Number 8 is errors. That is errors by the bank. Now, these are mistakes made by the bank when entering amounts or mistake made when making entries in the customer's account. Then we have number 9. We have overcasting of figures, and undercasting of figures. Now, we have to look at the perspective that I said earlier. That is, we must prepare the format of the bank statement. Format. Now, format. Bank reconciliation statement. Now, what we need to do is in the statement I want to prepare, the first one, that is, you look at this, then we start, either we start from the balance as per cash book or we start from the balance as per bank statement. But here we're going to start with balance as per cash book. The Naira sign will be there. Then you are going to have your unpresented check. You have your unpresented check. Then you have your credit transfer. And again, if there is any dividend paid into the bank directly, you have your dividend. When you add all this together, it will give you this. When you add all those ones together, it will give you this. You can either send this one here, balance as per cash book. You add this together, then this it will give you this. Then this, the balance as per cash book, and this one will give you this. Then you'll be able to now less your uncredited check. Less uncredited check. Now, after that one, you look at your bank charges, your bank commission, and also you have your bank charges. If there is any, you have your bank commission. If there is any, then you have your standing order and your return on check. You have your standing order and this honored check. All this will give you this amount, then you add it together with what you got from unpresented check, and what it will give you must be equal to what you get here, must be equal to your balance in the bank statement. bank statements must be equal to the balance as per bank statement. Now, we want to prepare the format of the cash adjusted cash book with the bank reconciliation statement. Now, looking at the format of adjusted cash book, looking at the format of the adjusted cash book. Now, the adjusted cash book. Now, the format for adjusted cash book, you see, this is the second perspective. Adjusted cash book. Adjusted cash book. All you need to do is debit and the credit into format. Now, under the format, the first thing we have to do is bring down our balance brought forward. Our balance brought forward. It must always be debit on the debit side. Now, under the debit side, we're going to look at items that are fed, that are caused in the bank, that do not reflect in the cash book when we are giving the cash book. The items that occurs in the bank that do not reflect in the cash book. Like here, we look at the credit transfer. Credit transfer. Then we look at our dividend, the one we have here. Credit transfer, the dividend. And then if there's another one, we look at our receipt on the cash and payment on the cash. We look at our receipt on the cash, and then payment over cash. Our payment over cash. Coming to this side, we will determine the other ones, which we have the bank charges, we have the bank commission, if any, the bank commission, we have the standing order, then we have the dishonored check. Dishonored check. Dishonored check. Now, all these will be added together to make, if there's any receipt over cash, we add it. If there's any other one, we have the standing order, we have the bank commission, we have the bank charges, dishonored check. Payment on the cash. We'll look at the payment on the cash. Then everything will now be added together. Everything will be added together. And then the larger chunk will be written down and deduction will be made. And we are going to have what we call the balance carried down. Now this balance carried down will now be transferred to the bank reconciliation statement. Now we now prepare the bank reconciliation statement. The bank reconciliation statement. Now you start unlike this. All those one will not, the credit transfer, the dividend, the bank charges, the bank commission, and all this one will not appear. Because we have treated all those ones that were not written in the cash book, we have written it back to the cash book, and we are able to determine a new cash book balance, which will now be carried down to the bank reconciliation statement. And we'll start from balance as per cash book. Balance as per cash book. Let us put it there. Now, you then had your unpresented check. Unpresented check. You have your unpresented check. What you get is this. Then you less your uncredited check. This, and what you get is this. And this one will give us balance as per bank statement. Now, if you are going to prepare and you are going to prepare an illustration to demonstrate all these formats, that is, you are going to make entries in the bank reconciliation statement using the bank reconciliation statement alone and then using the adjusted cash book. Now, if at the end of the day you are not able to arrive at the bank statement balance, which was given in the question, then the student is practically wrong. The student is practically wrong. With this, next class we'll be able to look at an illustration and we'll be able to work out all those things in our next class. Thank you, viewers.